$16 trillion. That's how much tokenized assets could be worth by 2030. Those can be digital versions of things like real estate, stocks, or even art. $16 trillion. Let that sink in. This isn't just a big number, it's the kind of number that could flip global finance on its head. And that's where BlackRock comes in. They're a giant managing $10 trillion worth of assets. But here's the twist. They're not just watching this revolution. They're diving in head first. They've poured billions into their Bal Fund, betting big on tokenized assets. But what happens if they're wrong? What are the experts saying? And most importantly, what does the future look like? These are all questions I want to get to the bottom of. But first, let's get back to where it all started. Alright, let's rewind the clock to 2009. Bitcoin just dropped. It wasn't just another online currency. It was the beginning of something huge. Bitcoin introduced blockchain, a digital ledger that could track anything, not just money. But here's the thing. Most people didn't know this was going to change the whole game. Fast forward to 2015, and along comes Ethereum. Now Ethereum does something pretty wild. It introduces smart contracts, a piece of code that lets you program transactions automatically. What does this mean? Well, it opens the door to something even crazier. Tokenized assets. These are digital versions of real-world things like real estate, or stocks, or even art. So Ethereum basically told the world, hey, blockchain isn't just for money. It can represent anything. Now, let's hit 2017. ICOs are all the rage. Everyone's raising millions by selling digital tokens. It's chaotic, it's exciting, but it also freaked out regulators. Suddenly, big institutions are cautious, thinking, hold on, what's going on here? But even with all that uncertainty, the idea of tokenized assets wasn't going away. In fact, it was just getting started. Enter BlackRock, the giant of the investment world. In the 2020s, they see what blockchain can really do. It can make real-world assets more accessible, more liquid, and more efficient. And in 2021, they make their move. BlackRock launches the Bal Fund, pouring money into blockchain projects focused on tokenizing assets. That's their signal. This is no longer a side project, they're in. So now that we know how tokenization and blockchain came to be, let's zoom in on why BlackRock is so eager to get involved. It's not just about profit, it's about control and the future of finance. If they succeed, they could reshape the entire industry. But if they fail, the stakes are massive. Alright, let's zoom in on the main player here. This is a giant in the finance world, managing a portfolio of over $10 trillion. But despite all that power, they're looking at something new. Tokenizing real-world stuff. Things like real estate and stocks, and even commodities. But why? Well, turning these things into digital tokens makes them easier to trade and much more accessible. It's a game changer, and BlackRock wants to lead the change. But if they don't nail this, they could lose their spot at the top. The financial world is changing fast, and if BlackRock doesn't jump on tokenization, they're going to get passed up by fintech startups and traditional banks. It's not just about keeping up, it's about billions of dollars and market share slipping away. So who or what's standing in their way? It's not just one competitor, it's the entire financial system, banks and exchanges, and all the big players who make money from transactions. Tokenization will cut them out. No more middlemen. And that's a threat to everything they know. If these players don't adapt, they'll be left behind. A decentralized and more efficient system will take over. These old giants will lose influence and market share and profit. It's a ticking clock. So BlackRock is pushing hard for tokenization. If they get it right, they'll shape the future of finance. If they don't, they risk watching from the sidelines as others make the rules. So BlackRock is all in. But what does the data really say? Is this the future of finance or just hype? We've seen the stakes, but let's dive into the numbers and expert opinions and what the future will be. Alright, let's dive into the numbers first, because this stuff is massive. According to PwC, the market for tokenized assets could hit a jaw-dropping $16 trillion by 2030. That's a big number. And it's happening because tokenization is changing the game. It's making these assets easier to trade, more liquid, and accessible to more people. This is why giant firms like BlackRock are jumping in. They see the potential. But let's slow down for a second and hear from the experts. The reason why so many institutions are on board with tokenization is because of blockchain. It's secure and transparent and can handle huge amounts of data. Experts from Deloitte and Goldman Sachs say that tokenization could totally democratize access to capital markets. This means that small investors could get in on things that used to be out of reach. But both of these firms agree that without clear regulations, tokenization can't reach its full potential. It's like trying to build a house without a foundation. Now let's talk about the people, the general public. Statista ran a survey in 2023, and they found that while 43% of people have heard of blockchain, only 10% understand how tokenization fits into all of this. So most people are aware of blockchain, but not so much of tokenized assets. And when they do hear about it, they're often skeptical. A 2022 study from Fidelity found that while institutional investors are excited about the possibilities, regular folks are still worried about security and the lack of clear rules. Trust is a big deal here. And until that trust is built, a lot of people are going to sit on the sidelines. So what does this all mean for the future? We've got three possible scenarios: a best case, a worst case, and a most likely case scenario. In the best case scenario, tokenization becomes mainstream. Imagine a world where you can trade tokenized assets as easily as sending an email. You can buy into real estate or stocks with just a click, and it's all safe, secure, and transparent. We get global markets where anyone can participate, and wealth building becomes more accessible than ever. But McKinsey says that this only works if regulators step up and create clear rules for the game. On the flip side, if regulators drag their feet, tokenization could get stuck in limbo. Markets could remain fragmented, inefficient, and prone to high volatility. If that's the case, the Bank of International Settlements predicts that people will lose trust, and the whole thing will collapse before it ever really gets off the ground. The most probable future is somewhere in between. Tokenization is already happening, but it's still early days. Major players like BlackRock are moving forward, but adoption will be slow. The technology needs to mature, and regulators need to catch up. Deloitte predicts that over time, we'll see steady growth, and tokenized assets will become a bigger part of the financial landscape. But it won't happen overnight. So where does this leave us? The potential is huge, but the road ahead is full of potholes. Whether we get the best case future or the worst, it's clear that tokenization will play a big role in finance. The real question is how soon and how smoothly this all happens. But while everyone is speculating on these tokenized assets, countries like the UAE and Sweden are experimenting with blockchain for property registries. It all happens instantly. No middlemen, no hidden fees, just a few clicks, and the deal is done. If you want to find out more, watch this piece on the revolution in the real estate market. Thanks for watching, guys, and stay informed.